Hello, everybody. Thank you for joining us for our virtual business discussion. Today, we're going to be talking about balancing the viability of your business. Hi, my name is Lee Schwartz. Since March, we've held numerous webinars and counseled countless clients. I know you're getting inundated with information via email and webinars, and we're all getting a little Zoom fatigue. But I want you to know that we appreciate you choosing to spend your time with us today. And we're going to do our best to make this meaningful for you. Okay, look, I'm going to come right out and say it. There's not going to be a lot of great news when we're talking about the viability of your business during an unprecedented global pandemic. It was announced just this morning that the US economy suffered its worst period ever in the second quarter, with GDP falling a historic 32.9%. But we've all heard enough doom and gloom over the last 4 months, and we're going to focus today on giving you tools and action items that you can put in place to get through this thing and come out the other side as strong as possible. From peeking at the attendee list, we've got a large and diverse group of companies on here today. We'll do our best to be industry agnostic. Many of you are already clients of SVA, and we'd encourage you to reach out to your SVA contact if you have questions coming out of this. If you're not a client and you have questions, please reach out to me and I'll get you connected to the correct subject matter expert at SVA who can help. If you do have a question during the webinar, open up the chat box in Zoom and submit it to all panelists. We are going to leave time at the end for Q&A, and we'll get to as many questions as possible. Also, we are recording this webinar. You'll receive an email with a link to a survey as well as our SVA resource page where the webinar recording will be available. The truth is, discussing cash flows and analyzing receivables aren't always the most exciting topics. But I think we've got the right presenters to keep it interactive and maybe have a little fun. So with that, let me introduce Nancy Melberg and Dan Glomsky, both principals from SVA. Dan, why don't you take it away?
Perfect. Thanks, Lee. So I want to kind of reinforce what Lee indicated, that we want to try to make this as interactive as possible. So if you do have questions that are maybe on your mind as we go through particular topics, please chat them, send it through the chat function. We'll certainly have time at the end of this presentation to give some commentary as far as our outlook on things. As on a daily basis, that's exactly what we're doing. We're talking to our clients, trying to assess their situation and trying to help them move forward. As part of this presentation, I thought I'd start with pulling some survey data that it's a more of a national survey, but a lot of the information that was part of this survey also resonated quite consistently with the client meetings that I've had over time from the day one that the stay-at-home order started and so forth. So our intent here is to lay out the survey questions, give you some commentary with respect to that, then lay out some action points that will get your business mind thinking as far as, am I doing the things that I need to do to remain in the position that I am, that I was in the past. So let's try to rejuvenate things and let's move it forward. And the first question that we have is, let me see here. 40% of businesses expect to resize their organization through labor reduction over the next 4 months. And Nancy's going to share some thoughts on that.
Thanks, Dan. And first of all, I want to say thank you to everybody. I feel like over the course of the past several months, Dan and I have developed a little group of followers who have followed us with the PPP and hopefully are going to continue following us as we talk about some of the business challenges that people are facing, some of the things we're hearing. So thank you. And if you have any other ideas of seminars that you'd like us to talk about, please reach out to us and let us know, because we really want to make sure that we're connecting with some of the issues people have. So talking about this first one, this 40% who expect to reduce their workflow. So I think the reality of this is not only a result of maybe your choice to reduce your workflow, maybe due to a lack of revenue, maybe due to some of the restrictions through the CDC, But I think also this is not only your choice, but this is also possibly from the standpoint of employees not wanting to return to work. So I have taken a lot of calls from a lot of people about what do I do if my employees don't want to come back? And I'm forced with looking at a much smaller work, group of workers within my organization to get work done. And some of the things that I think this COVID has done is really created some opportunities for businesses. So although we're always looking or hearing about the negative on the news, and I think that's the way the news likes to report things, the reality is there's some opportunities here for companies too. And one of those opportunities is to really look at your labor and to really determine, can you outsource any of that work that's being done? Can you hire independent contractors without having to pay benefits or having to pay the overhead of those independent contractors? Can you use freelance employees? I'm actually seeing some organizations actually subcontracting out entire departments. The ones that I see the most frequently are advertising, maybe looking at an advertising agency and determine if there's something that they can do for a monthly retainer and really take on all of your advertising. I'm also seeing that a lot with accounting. We're actually seeing that at SVA as companies don't want to pay or can't find somebody qualified to do their accounting or their bookkeeping. They're reaching out to accounting firms, and we offer that particular service for a monthly fee. And that could be less than you're paying a full-time employee and you don't have the benefits. So again, I think this really creates opportunities for businesses to look at those areas and determine if they can outsource that. It also is a good opportunity to look at what employees are doing, reevaluate their work, and possibly do some consolidations of some areas. I am a treasurer for a nonprofit, and we looked at some reductions a couple months ago and really determined that we weren't really utilizing people in the way that we should be utilizing them. And it was amazing the result we had, and it was amazing the people that actually stepped up and felt like maybe they weren't challenged enough and they actually wanted the additional responsibility. So I think, again, let's look at this as creating some opportunities and figuring out how we can make that work in our advantage. The other survey was 40% of businesses expect a decline in revenue. That's a tongue twister.
Yeah, and that one is, I mean, I think, it's obvious, if you watch the news or, the need for, this PPP loans and so forth to kind of supplement businesses for that loss in revenue. So I think the expectation that there would be a loss in revenue wasn't a big surprise to me. But 40% didn't actually sound as bad as I thought it potentially could have been. As part of that survey result, there was also 10% of that group expected a 20 or more, 20% or more of those 10% of that 40% expected about a 20% or more reduction in revenue or sales. So we know that the reduction in sales is something that we definitely have to focus on. And what is the life cycle and how are we going to pull that back? And as part of the presentation, Nancy is going to later on discuss some revenue ideas and moving that forward. The other piece of that 40% that expected a reduction was things that I don't think surprises anybody, but it's the restaurants. And it's not just the restaurants that's impacted, it's the suppliers of the restaurant. It could be, advertisers for the restaurant. So there's a lot of industries that feed the industry of, the rental, the restaurant industry. But what we want to keep in mind is that I think there's a conscious effort to try to bring them back and support them. And I think I heard a statement from somebody that indicated that until the restaurant industry comes back, there's no recovery from the COVID situation. So there's a big emphasis on that. And so we expect to see some of that things happening. The other thing we want to mention, or I want to mention with respect to the sales piece, is that when we have a reduction in sales, our first reaction is to, go into a cost cutting mode or, start, putting our head down and figuring out, why our customer isn't ordering from us and so forth. And those are great things to do to some degree, but we have to remain positive. We have to evaluate what other opportunities are there available for us. And, as Nancy mentioned above, is that, we have, different outsourcing opportunities, and that could lead to, repositioning our company and trying to help develop, maybe a service line that is a little bit different than it was before. And so really want, the revenue reduction I think is expected, but hopefully it's short term. And we're also preparing ourselves for what that means to really get through this. And, that's the information that we want to share. Another survey.
So, one thing, Dan, before you go further, one thing that I want to bring up too, that I'm really seeing with a lot of businesses that I'm talking to, is the reduction in revenue can really be from a disruption in the supply chain. I'm going to give you an example of a furniture company, retail furniture company. They have customers coming in looking for furniture, but they don't have as much inventory right now because they are having a hard time getting the inventory from the manufacturers. So I think the point that I want to make with this is I do a program called the Value Builder, and I talk about the importance of certain concentration within your organization. And one of those, we always hear about customer concentration, but the other thing is vendor concentration. So I really want to challenge people to make sure that you're looking at your vendors or your suppliers. I realize that you have some that you probably use pretty frequently, but you want to make sure that you have other relationships and other suppliers and vendors available, because if you do see this big delay in receiving inventory, you don't want to lose sales just because you don't have product. So I think vendor concentration is really going to come into play right now during these times.
Yeah, I agree, Nancy. I mean, holistically, there's the COVID's affected so many different areas to the point where it's not necessarily, you might have all the customers that are looking for a particular product, use the masks, right? When the first pandemic first hit, I ordered some masks online and it took me whatever, a month and a half to get them. And then now you go walk into Walgreens and they're front and center for you. So they fixed that supply chain, but the revenue would have been greater if it would have been available, 3 months ago. So those types of things that, we recognize and we know the supply chain will eventually fill that up. But obviously the more sources we have, the better we're going to be positioned. So when we look at the revenues, we got to also look at being able to deliver those products. Another survey question, Nancy, was companies that had a strategy to place an investment in technology were able to more quickly react to the recovery.
Yeah, I think this question and the next question, a number of businesses that have been saving and reinvesting technology over the last 12 years, these two kind of go a little bit hand in hand. And I think we're going to talk, I'm not going to say a lot here because I think we're going to talk a lot about technology and what this pandemic has done to companies. And we're going to get into a little bit more detail later on in the presentation. So I'm not going to talk a lot about it here. Another one of the survey results was 80% of businesses did not meet their cost reduction goals in 2019. Dan, maybe you can give us some of those reasons.
Yeah, so the thing that, this question, it's like, oh, it doesn't relate to COVID, we're in 2020, that type of thing, but it really kind of more so goes to an illustration of behaviors. And one thing we want to make sure we emphasize is that the behavior that resulted in a business making a commitment to reduce its costs, only 80% of those, or 80% of those businesses didn't follow through on that. And now is not the time to fail and not follow through on those particular objectives or goals. So the reality of it is the understanding why people are maybe doing these things is going to be important as far as trying to move past them. And the three primary reasons that came up as part of that process was, first one was implementation challenges. And I boil the implementation challenges down to basically three things: people, processes, and technology. And if if you don't understand them, each one of those particular elements as you go into the implementation or trying to meet a particular goal, you're going to have challenges. You're going to have things that you didn't expect. I'm not saying that everything has to be sorted out and here's the roadmap to get there, because there's going to be forks in the road. There's going to be, things that change that create some kind of challenges, but you want to try to reduce those and make sure you have the commitment of the people. Make sure you have the processes understood and that people are following them, and make sure the technology is there to support you. And, we're obviously embracing more technology as we go remote, and that is, important, but there's also things that, how do we get better at that, right? So we need the ability to do that, and technology upgrades and that type of things might be necessary. Another reason that we have seen challenges in the implementation process is ineffective ERP systems or financial systems, right? So the role of the accounting system is really to capture the data, report the results, so that a business owner or an individual can make a decision, and it has to be timely, right? It has to be timely and accurate. And if the systems are not there to allow it, right? If I'm waiting a month or 2 months to try getting some data back, and I should have made that decision, or carried too much inventory, or carried too many employees, whatever it might be, I want to make that decision and have some time to think about it versus waiting several months or weeks or whatever to make that decision. So it's important that things are timely and that they're accurate, and we want to make sure the systems are there to support that. And the third is an obvious one. It's unrealistic targets. And I can go say that I'm going to grow my business 50%, and I'm in the let's say a manufacturing cell. I might not have the ability to either produce 50% of that revenue, or B, get to that many clients and increase my production, within a 1 year period. So it's really making sure you set the realistic targets, making sure that you have the appropriate systems to capture that information and feedback, and make sure you know what you're measuring and why you're measuring it, because that's what's going to tell you if you're meeting your goal and objective. And then third is, make sure your processes are ready. You got the people on board, you have the processes there, and you have technology that will support that. The next other comments we want to make with respect to the survey is some other lessons that we've learned throughout this process. And the first one is working remote. And I'm a believer in working remote, and I think that it's really going to open up the mindset as far as how businesses are going to interact going forward. Do I think that the remote worker is the perfect model for everybody? Maybe not currently, but we have to challenge ourselves to be thinking forward, and what's working well, what's not working well, and how do we make innovation, and how do we make individuals productive, accessible? Are we developing them? There's all those things that are going to need some attention. And so the initial thing is, going remote is helpful. It allows us to continue to operate and do businesses. But I think there's some challenges that we're going to run into. And I think a recent data came out saying that the remote worker productivity is actually down. And that's primarily because I think not everybody was ready for it. And there's, things that we want to put into place. The digital operations, we also learned that the businesses that were ready to go remote, businesses that had an online presence or the ability to put an online presence out there, were more successful in either reducing the amount of revenue reduction that they had, or potentially capitalizing on some revenue opportunities. So, I use the grocery store as an example. As they said, okay, well, we can bring your groceries to your car. We'll, fill out this online order and we'll get it out there. So it allowed the grocery store, although people didn't want to go into the grocery store and pick their groceries out, it still allowed that grocery store to capture some additional revenue. Same thing with restaurants, right? Restaurants are closed, but yet we have curbside pickup, and we have the online ability of ordering online and so forth. Now, the difference between online ordering and obviously calling in is the being online allows for more capacity and more generation of revenue without as much human interaction and so forth. So the online automation is something that we also see as things that we want to embrace and make sure that we are evolving our clients, our businesses to get there to the extent that we can. And then the fourth one here is industries that can adapt. Now, the reality of it is not all industries were able to adapt. So we use the example of a dentist. A dentist had to shut down because they physically couldn't see people. They have to look in your mouth to actually do the work, right? So I can't go on a telemedicine visit and fix your your tooth. So those were industries that were we're going to have to ride it out, but knew that revenue stream is going to be there when things open up, and also make the adjustments to how they're going to service patients and that type of thing. Whereas on the flip side, if I'm a physician that's seeing patients and trying to identify what potential issues they might be dealing with, COVID or the flu or some other issues, they had the ability to telemedicine, and video chat with patients. So they, although not 100% at the capacity that they could run through an office, they had the ability to continue to generate some revenue stream. So these are the things that, we want to make sure that you're kind of assessing is where does your industry play in this? And I use the telemedicine as a possible evolution, because if we go to where more physicians are meeting with patients via video, well, they're going to need the requirement of having lab work done. Well, is that lab work going to be done at your home? Is the lab work going to be done at a lab? There's areas that I think could increase their business footprint as a result of some of these changes. And we want you to start thinking about what those changes are and how does your market, your product, your service fit into that? And is there an opportunity to capitalize? So although our current revenue might be down, the reality is we don't want to stop there. We want to, see where we can, reinvent ourselves or take an opportunity to capitalize. So let's look at it from that perspective. And I think Nancy has some, making adjustments that we, think work well for clients.
Yeah, Dan, a couple comments I want to make on some of the things you said. First of all, don't we all wish we had some stock in Zoom right now? Because a year ago, who would have known that we would have been doing webinars the way we're doing them? So that's a really good example how a company like Zoom is capitalizing on what's going on right now. So again, challenging your organization to look to see what you could do to adapt and adapt quickly. The other comment that I just wanted to make real quick was about the remote workforce. I think the reality of people working remote was when people first went remote, I think it was really hard to turn off personal time from work time because people were home working. And I think that's where we saw the big spike. And I think now that we've had a couple of months, probably more than a couple of months, but we've had some time to settle in, I think people working remote are settling into a schedule now. And so I'm wondering if it's not as much of a decline as it is just more of a leveling off. We've kind of flattened that curve a little bit, so to speak. So that was just one of the things that I thought about as you were talking. So I think some of the adjustments that we can be making through all this is, first of all, we want to look at this whole remote workforce and what opportunity does this give us in respect to our real estate needs, our office space. I talked to several people that prior to this were thinking about moving their location because they needed more office space. And it's interesting how now after all this, now we're finding we have too much space because we have a certain amount of people that have the capacity to work at home very efficiently. And so it really decreases our need to expand our office space, rather allow those people to work remotely and maybe stay where we're at. Possibly looking at improvising your office space or changing things around. What do you really need to do to keep people separated and what's the cost of that? I think those are things people need to be looking at. We, interestingly enough, just today in our office put up plexiglass between the cubes. So I think those are all things that people need to look at and they need to think about and make adjustments for if they do want to bring people back. You know, looking at things like buying people laptops versus a desktop, getting people headsets so they can do meetings more efficiently and effectively. So I think those are certainly things people can look at as an impact of staying remote. And then digitizing, this is really looking at digital technology. How paperless is your firm? How much information can be scanned and be shared by everyone within the organization? I know that several years ago when the concept of paperless came out, it scared everybody to death. But I think the reality is this is the way our world is beginning to operate more and more. And this has kind of forced people who weren't there yet to figure out how to get there. You know, that could include things like saving things to a cloud. You know, you've heard a lot of these cloud storage companies. I do want to make a point here, though, to just, if your company goes that route, to do your due diligence. Make sure that any cloud storage provider that you choose has a lot of security in place, redundancies. Those are the kind of things that you need to really be looking into before making that decision to switch.
Yeah, Nancy, that is I think that's one thing that always sat in the back of my mind from even everybody going remote and having access to data and dialing into the systems. You know, our rush to get remote, did we sacrifice that security? And you know, it's extremely important that, you know, everybody really assesses that. And that's quite honestly, a lot of these changes, it's, you know, we want to be more, you know, making sure that we're not compromising something on the backside by trying to get the efficiencies today, right? It might be that the efficiencies are going to be there tomorrow, but we're going to be better positioned. We're going to be safer. And I think that is one thing that really concerned me with a lot of clients is, you know, yeah, I can do remote. It's like, really, you can do remote? How did you do that so quickly? And then you start getting a little bit nervous on how secure it was. So the digitizing, the going remote, security comes first on all those things, and make sure you don't shortcut that, because that could compromise you dramatically.
Yeah, do your due diligence. You want to read reviews on companies. You want to make sure that you're choosing the right one. You know, the other option is cloud-based software, or if you don't have the ability to have a cloud-based software, really looking at hosting that software. There are a lot of providers out there that do third-party hosting of software. They will keep their servers on site. They will host it. And it gives you the look and feel of cloud-based software, but it's not 100% cloud-based. But it really gives you the ability to allow multiple people to access that data at the same time or from different locations. Again, I think as long as you do your due diligence, there's also VPN access that some people maybe didn't have prior to this, and now they're looking into, how do I allow people to have VPN access into my server? So these are all things that you can be doing and making adjustments for. And really, again, I think the key here, like Dan said, is just do your due diligence. Make sure that you know the company that you're working for, and make sure that you know the results they have with other entities. And don't be afraid to ask for a reference. If you're looking at somebody hosting, ask to talk to another client who uses their service. They should have the ability to reach out and ask for references. So I think that would be really important. Another thing is scenario planning. I think what you really need to do is look at how all of this is going to have an impact on your organization and plan for it. I think a lot of the things that Dan and I are talking about today is about planning. Put things down on paper, have a roadmap of things that you need to do. We're going to give you some action points at the end of this that hopefully you can take, and you can start working on those action points. You know, we keep hearing about this second wave that's going to come in the fall. And I want to make sure that everybody knows what's going to happen if that second wave does come, because a lot of organizations are slowly starting to bring people back now. I know that in Waukesha County, a lot of people are back at work versus maybe in Milwaukee County. So I think we need to look at what happens if we have another wave and we have to leave. I think you need to map out in your organization who's going to stay, who's going to go first if you have to do it in waves. Same thing with coming back. One of the things that we did here that was really important at SVA is we had to have scanners here because we had so many employees working remotely and they needed to access that information that clients were dropping off. So it became very evident to us very early on that we needed to have a small group of people here that were doing nothing but scanning documents. So I think, again, you can look at your organization, and although you may think you have the ability to work remote, what needs to happen prior to that to make sure people can do that efficiently? So again, map that out. The other thing, you know, I wanted to talk a little bit about some of the stuff we're hearing in the news right now. And some of this is not really related to financials or the accounting or your company, but it will have a direct impact on you. And one of those things is schools closing right now and only having online classes in the fall. I know this is going to impact a lot of businesses because people with small children who don't have the ability to have those kids be home alone and to work independently. People need to have a plan, and businesses need to have a plan on how they're going to support those employees. I mean, it's almost August 1st. Kids were supposed to be going back soon. So what are companies going to do to have those employees be able to work from home effectively if their school can't go back? Some of the things that I'm actually hearing people do is this concept of group teaching. It's really interesting to me, and it sounds like it would work, although my daughter's older, so it wouldn't affect me, but it sounds interesting. I'm hearing about parents who are getting together, maybe three or four families, and having 3 or 4 children get together and learn together, and they go to one of the family's homes every day. So if you're working 5 days a week, maybe you're only staying home 1 day and your child is learning in a very small group setting where hopefully they can keep people apart and safe. But it's allowing people to at least return to work if they are in a position that they can't work from home, but still being flexible with that employee on saying, yes, 1 day a week you can stay home and fill in this role that you need in order to be here the other 4 days. So I think these are things that companies are going to have to make adjustments and be flexible on, and maybe correct their course as they go because things seem to be changing daily.
Yeah, Nancy, I think that's a good point. And I think that also goes to, you know, the revenue and the capacity of your organization. And, you know, certainly if people are not able to work because, you know, they have young children at home or whatever the case might be, you know, what alternatives do I have? You know, is it possible now that I'm going to work Saturday and Sundays versus Monday and Tuesday? You know, that type of thing. I mean, we got to just start being, again, innovative to find solutions that work for us. But we also want a scenario plan, and not only scenario plan for the fact that somebody might not be there to do something or that a certain exercise needs to get done, but also scenario plan as far as, you know, what does maybe that loss in productivity mean to my organization, and how do I either compensate that, or how do I make sure I fulfill the obligations that I have as an organization with the capacity that I do have? And it could be outsourcing, it could be different work schedules, it could be nighttime versus daytime. You know, there's a lot of changes or variations that can happen, but until we scenario plan and start putting it pen to paper, we really don't have a plan. Okay, so that's what I'm really more so trying to emphasize.
And I think, you know, kind of related to what we talked about in the very first bullet point when we were talking about outsourcing, things like that. I think, again, like you said, Dan, having a plan in place, but being flexible. And I think this also gives organizations a really good opportunity to see which employees are willing to step it up, because I think you're going to see companies are going to see some superstars come out of this. Because if there's a position that needs to be filled and they step it up and fill that, I think it's really going to mean a lot to a company to see which employees are really willing to step it up to keep the business going and realize that they are going to benefit from the success of the company. So I think the other thing I want to give real quick is a quick PPP update. I know that there's a lot of stuff going on right now, and it seems like there's been a little bit of a pause for those of you that have been following us and have been following our PPP webinars. We really haven't done one in about a month or so, maybe longer. It's been pretty quiet on the PPP front, but there is some information that I would like to pass along. The biggest piece right now is there's a pending bill that's called the Paycheck Protection Small Business Forgiveness Act. That bill right now, it's been approved by the Senate or referred to the Committee of Small Businesses. It's been sitting there since June 30th, so there hasn't been a lot of movement, but it's not dead in the water yet. And that really allows any businesses that have a PPP loan that is $150,000 or less to get automatic forgiveness. Anybody following any of the information on the PPP, there was a lot of organizations. I don't have that percentage off the top of my head, but it was probably well over 50% of the companies that got the loan got less than 150,000. So this really takes a lot of administrative burden off both the recipient of the loan, as well as the bank and the SVA, who's going to be trying to fulfill those applications. So there's more to come on this. As soon as SVA learns what happens with this legislation, we will send out an e-alert to everyone. So please make sure that you're signed up for e-alerts if you want that information as soon as we know about it. The other thing with the application is currently right now the SVA is not accepting any applications until they're saying August 10th. However, they've also said this is subject to an extension if there is new legislative amendments. So what does that mean? That means there could be some more changes. It could be this change above on the 150,000. It could be something else. One of the things that could be a possible correction, although we don't know yet, is the reduction in the FTEs. Currently, the way the application reads is the FTE reduction is taken on the total spend and not the loan proceeds. I think many people have questioned that from the very beginning. It didn't quite seem as that was the way it should be calculated. However, in light of the SBA trying to forgive as many loans as possible, then it made sense. However, it's possible that there could be a correction there. So, we're still monitoring that. And again, we will let everyone know if we find out any corrections. The other thing real quick on the PPP is the date of the application. So everyone knows, hopefully at this point, they extended the 8-week covered period to 24 weeks, and they extended the safe harbor deadline for restoring your FTEs from June 30th to December 31st of 2020. However, the good news is it doesn't seem like companies have to wait the full 24 weeks to apply for forgiveness. What that means is when they've spent all the money and they have restored their FTEs, they can apply for forgiveness at that point in time. The question on the application now reads, have you restored your FTEs the earlier of the date of this application or 12/31? Again, it's possible that could change. I don't think it will. But the good news is that people don't have to wait until December 31st. They can apply at any point. I would encourage people to make sure that they have spent 125% to 150% of their loan proceeds in the event that there is some FTE reduction and they do keep it at the total spend and not the loan amount. This would ensure that you would more than likely get 100% forgiveness. So again, this isn't a webinar on PPP, so I don't want to get too much into it. However, I think if anybody has any questions about any of this, feel free to reach out to Dan and I. We're really keeping an eye on everything that's going on out there right now, and we'd be more than happy to discuss anything specific to your organization off this webinar.
Yeah, as part of that, Nancy, there's the deductibility, and that's quite honestly one of the more exciting things that's developing in that area is, and it really feeds into this discussion because we talk about scenario planning. Well, the scenario planning is I have debt forgiveness for the PPP, but I don't get the deduction for the expenses. I now have to come up with tax dollars to be able to pay for that forgiveness of debt. So, that's something that should go into any planning model that you have, the possibility that you're going to have to cash flow that particular event. What's happening just currently on it is that the basically the IRS is saying that their position is strong, that it's obvious that if you get forgiveness of the debt, we're going to treat it as not being income. But then the deductions that you used from that debt proceeds are not going to be deductible. So the IRS at this point's position is, hey, it's, and that results in a taxable event for you. But what's happening is individuals are now saying that we're taking the deduction anyway, and we're going to take it to court if the IRS were to disallow it or not catch it and catch it at a later date. So the reality of it is we need legislative change to happen here. And right now in the bills that are currently introduced for additional PPP funding or additional expansion of the unemployment rate payments, those things are not, the bills do not include a forgiveness and making the deduction for the wages and so forth. So right now it's not looking promising from that perspective, but everybody's well aware of the issue. And if they're going to correct it, hopefully the two parties can come together and introduce something. So I really wanted to make sure that everybody was aware of that, but scenario planning, we need to make sure that that's factored in, because right now it's a taxable event. And if you receive 200,000 of PPP money and it all gets forgiven, you're going to have a tax hit of, whatever, $80,000 on that. So you need to make sure you're cash flow planning for that and make the appropriate.
And Dan, just one more point I'd like to make on that. The part that is a little concerning to me as well is that this could certainly cross over years. So this is going to be really important in your planning, because if you took the deduction in 2020, because that's when you paid your employees and it was a wage deduction and you still have a loan sitting on your books, the loan doesn't get forgiven until 2021, because there's a 5-month timeline from the date you fill out the application to the date that the SVA approves that application. We are certainly looking at 2021. And if there is no legislative change and this money is taxable, at that point, you're going to be picking up income in 2021 for an expense you took in 2020. So again, we're going to monitor that situation, but that is something where planning is going to be really, really important right now.
Yeah, and as we talk about the planning, right? I mean, we can always create a situation or a scenario that's so conservative that it totally hamstrings your organization. That's not what we're proposing here. We're really just trying to, let's say you run the scenarios through and the worst case scenario, everything's just fine. Well, then you can feel a little more comfortable and you can be a little more aggressive in other areas. But if you run the scenarios where you're, really extremely conservative and it really puts you in a dire strait, well, then we need to really make adjustments and make sure that we kind of plan for that. Not so much that reality is going to happen, but be proactive to make sure that reality does not happen. And how do we go about doing that? So that's where, that's really kind of the feedback that I'm trying to pass along and make sure that everybody kind of understands. It's not that we're trying to say, oh, it's just going to be awful. We just want to see what we can do to be proactive about that process.
And that's a great comment, and I think one we'll try and come back to. I do have a question about that a little bit later on, but I'm wondering if now, I know we had some action points that we wanted you guys to get to. Can we move on to those so we still leave a few minutes for Q&A?
Sure, absolutely. So the first action item we have was, assessing your current sales pipeline and projecting it into the future. And we have some ideas from that perspective. Nancy?
Yeah, so really one thing I want to point out is this is something businesses should be doing all the time. Again, I know I referenced this value builder earlier, but when I do this is one of the points that we talk about is really have a not a magnifying glass, have binoculars to look into the future sales of your company. So everyone should be doing this. How do I do this? And this is where I think these action points come in. These are some things, certainly not all inclusive, and I'm going to go through these fairly quickly and due to the time constraints we have here. But really the first one is review where you're at for the last few months. What is the current state of your business? You know, one example might be a contractor. Although they may say, oh yes, I'm doing very, very well right now, that could be because they have a backlog. You know, I think a lot of contractors prior to COVID were so backed up that it was months before they could get, you know, before they could get to all their customers just because of their backlog. So what you really want to be aware of in that is you want to look at your backlog and you want to determine how long that backlog is going to ride you for. And then in conjunction with that, you want to look at what does my future pipeline look like? So once I get through my backlog, what sales am I making now that are going to fall into the future? And then at that point, you kind of have to marry the two together, and you have to look at historically, and you have to look at what's going on or what you have in the future to really determine what could that revenue look like. For a lot of people who have reoccurring revenue, this is great, and it actually makes your company a little bit more valuable if you have reoccurring revenue. This may actually be opportunities for you to try to get some reoccurring revenue. If you sell a product and a service, if you maybe put a discount on the service agreement or somehow have an automatic service agreement when they buy that product, because that's going to be some reoccurring revenue for the future. So I think that becomes really important to look at that. And then you want to just evaluate what's going on right now and look at the activity. You know, Dan talked about a lot of these things before, so I'm not really going to get into detail, but how can your company adjust? You know, if you're a restaurant doing curbside delivery, things like that, but really looking at what's happening, what's trending right now, and how can you quickly adjust and maybe generate some more revenue. So this is something that becomes really important, is just look at where you anticipate your revenue going forward. And then I think Dan's going to talk a little bit about accounts receivable.
Yeah, so the thing I want to mention here is that, you know, it's more so knowing what assets you have that are convertible to cash. And, you know, I expect a lot of businesses have been watching this and are on top of it. But the reality of it is, when we're doing this cash flow planning or evaluating things, we need to know whether the receivable is good, right? Am I going to collect on it? Is it something that's been out a while? Does a client maybe need a little prodding or attention to get it paid? You know, what's going to be the outcome? But we have to understand that so that we can model appropriately and determine what that scenario play out looks like. And it's not just accounts receivable that I want to talk about, it's also the inventory. You want to make sure that you're not carrying too much inventory, but have enough or appropriate level to meet your commitments or capacity needs. So that is what, you know, what we want as an action item. We want to evaluate and know what's good, right? And if I have a number on my balance sheet that says I have 200,000 of receivables, then I'm going to get 200,000 or there close of cash as a result of that. Or if I have $1 million of inventory, I'm going to get $1 million. I can convert that to, you know, $1 million of cash and that type of thing. So it's being real, and it's about knowing what the numbers realistically look like, and that's really important in this process. And then Nancy, I think you have a few comments on modeling cash flow from a cash flow planning perspective.
Yeah, so you really want to start with what we talked about, that sales pipeline before. But obviously, as everyone knows, that cash flow is not all about sales or net income. So some of the things you have to consider are the accounts receivable, like Dan had mentioned. You know, there is a way to calculate your days in AR, and that's your accounts receivable divided by your annual revenue times the number of days in a year. You want to probably know what that number is, because that really tells you how long it takes you to collect those accounts receivable. If you are concerned about any individual customer, I am actually telling some clients to calculate that days in receivable specific to customers, because it's possible they might need to reach out to someone if they're having some concerns about the client's ability to pay. So you can do that and you can monitor that. The other thing is you want to look at your accounts payable. You can possibly have opportunities to reach out to vendors and extend terms. It's funny because how many people that I hear that say, oh, I pay my payables within 5 or 10 days, and they think that's actually a great thing. Well, when you're looking at a working capital calculation, the idea is collect your receivables quicker than you pay your payables. So if you can actually hold off on your payables a little bit, it actually helps your working capital a little bit better. You also want to look at discounts, and you want to monitor. You want to analyze, if I have a discount with a vendor, do I have to draw on my line of credit to take that discount? You want to look at those simple calculation, which percentage is higher, and what is it going to cost me to pay sooner to take the discount? So you want to be looking at those things. Dan talked about inventory already. You want to make sure that if you can, you're possibly reducing your inventory levels or not carrying unnecessary inventory. There was a concept years ago people brought up called just-in-time inventory, which was really a way of reducing inventory and reducing the carrying costs on that. Here you have to be careful because of lead time on getting inventory, so you don't want it to cause you to lose sales. But again, these are the kind of things that create opportunities for people to look at where they can tighten up their organization. Another one is really looking at debt utilization and figuring out, do you have a line of credit? How much can you borrow on that line of credit? And what does the bank require? A lot of banks have you do a borrowing-based calculation on the line of credit. And that borrowing-based calculation is generally tied to your accounts receivable or inventory. So it could be a certain percentage, 60 to 70% of AR or 50% of inventory. You want to know what that calculation is, and you want to make sure that you have that available in case you need to draw on that line. If you don't have a line, then you want to make sure you establish one, just so you have the availability if you need to. So those are just, again, these are examples of things you can proactively be looking at now, because a lot of this is making sure that you're reacting quick enough or you're addressing the issue before it becomes an issue. So this is where the action points come into play and the planning and modeling comes into play. And I think Dan's going to talk a little bit about equity positions and if that supports growth of your organization.
Yeah, just a few minutes, because quite honestly, cash flow planning is what I consider to be part of this equity position, and really kind of determines how much capital somebody needs to have or leave in their business. And I think our next webinar, which is I think in 2 weeks, we're going to talk about benchmarking and trying to determine, how to evaluate your position as an organization and how do you push yourself past some of these numbers. But really, honestly, we need to make sure that our business is ready for an uptick. And what happens in 2008 and 9, when we had the last recession, and I'm not saying this is a recession, but the reality is we had a reduction in activity, and then we have an escalation where it comes back. But what we have is we have a timing where things, you perform the service or produce the product, and then you get collection, down the road. And what happens is we increase the level of production costs and that type of thing, and it's going to take us some time to collect on that. And we need to make sure we have enough capital, and whether it's debt or whether it's individual owner equity in the business, to allow us to be able to get back up to that higher capacity level. So that's really what I guess I want to make sure everybody's assessing as they go through this process. So with that, I'll turn it over to Lee. I know it doesn't leave a lot of time, so I apologize for that, but let's see what we can hammer out.
All right, sounds good. We'll take some time. We'll do some Q&A. Again, open up the chat function in Zoom, and as they come in, I'll sort of summarize them and put them out to Dan and Nancy. But as you guys are talking, I guess I had a question. You kind of touched on this, Dan, but you talked about sort of the mask story, right? How there weren't masks to be had and now there's masks everywhere. I think we've all interacted with businesses who are trying to quickly pivot and kind of chase that next, COVID solution, I guess. What's been your experience with that? And this really could be for Dan or Nancy. How do you evaluate those situations and decide whether or not to move forward on something like that?
Yeah, so we have this discussion with a client, and the one particular client, they do work with the healthcare industry, and as a result of nursing homes being shut down, we now have they can't get in there and get more revenue, but they do have products that have value and are maybe a possible COVID solution. But the reality of it is you have to assess how long it's going to take you to get to market. And if you're not going to be ready to get a product out there in 30 days or less, you might miss the opportunity. I'm not saying that you will miss the opportunity, but that's an assessment thing that you have to evaluate. How much is it going to cost you to produce what you want to get out there? Is the market going to accept it? Is there another solution? I mean, these are all things that factor in, and a lot of companies, assess that even before they have a discussion with me about doing that. The discussion comes back to me though, is how do I fund that, right? And, things were tight or whatever the case might be. And that's where we get into the discussion. And then I always want to question them. It's like, are we sure that, we can get to market on this in time? And then we can actually model out what that cash flow activity might look like, what kind of activity they need to do. There's a lot of questions that go into it, but we do not want to chase a solution and be there 6 months to deliver the solution when the need might not be there anymore.
Well, and I think, Dan, to that point too, I think the solution needs to be cost effective. I think we need to look at the revenue we're going to be able to produce and the cost to get it there. So making sure that it's cost effective as well.
So we did have a question come in about, I'm going to kind of try and summarize this a little bit, but about, I guess from a company that might have waited too long to act in 2008. How do I know when it's, I think what they're kind of saying is, I don't want to be trigger happy, but I also don't want to be trigger nervous. This could be very industry specific, but what would be some things you'd be looking for to help advise somebody on how to make some major business decisions during this time or changes?
I think a lot of the things we talked about above is really looking at, you got to be able to project out your sales pipeline. And I know that contractors were hit pretty hard in 2006 to 2008. Again, so it's making sure, what do you have in the pipeline? And when Dan talked about the equity position a little bit, I think that's really key, is that I encourage organizations to the extent that they can to keep some equity in their company right now. I know that could be hard for people, but pulling out all the equity doesn't leave a whole lot there. As I sometimes say, save it for a rainy day, in case we have another rainy day like 2008. I think having that cushion in place will certainly help an organization. I think we saw a lot of contractors go out of business in 2008. And I think it's because they weren't properly positioned from an equity standpoint. So I think really looking at all the things we talked about, and I know there's a lot, and looking at your equity, I think is going to help ride the storm per se.
Yeah, a lot of the 2008 issues were, employers wanted to hang on to their employees. They didn't want to let them go, right? And they kept waiting for it to come back. And I think modeling and being real with what your projections are is extremely important. And Nancy brings out a great point too. We are asking the business to be disciplined, right? We're going to cut costs. We're going to control production, whatever the case may be. But then as an owner, you also have to be disciplined, right? You have to understand that, okay, I maybe can't spend as much at home that I did in the past, and therefore keep stripping that equity out of the business. So the discipline comes in two fronts, but as far as making that decision of whether to hang on to employees or to pivot course, that really requires the modeling, and let's see what these things look like and make an educated decision, not necessarily an emotional one.
Yeah, that's great. We had another question come in. This one is a little bit industry specific, but maybe you guys can take this from, address this from the perspective of a few different industries. So how can I predict cash flow in a business that collects payment when the service is performed or the product is sold?
To me, that's actually kind of an easy one, because then it's all about predicting sales or revenue, because you don't have accounts receivable to deal with. So you really don't have to worry about how long it's going to take me to collect that cash. So when we look at our cash flow projections and we say it starts with sales pipeline and then you're looking at accounts receivable, you don't have to look at accounts receivable. So what you need to do in an organization like that is to really have a pretty good sales pipeline or sales projections in place on what they're going to sell, because that's how they're going to get paid, is based on the product or service that they're selling.
This is coming from the perspective of a retail business, so which might might not have a full, pipeline, a great vision into a pipeline.
But there still should be, there's going to be possibly some cyclicality of the type of business. So again, it is a little bit specific. We'd have to know a little bit more about what type of industry, what kind of cycles they have in their sales. And then really that in conjunction with some of the things that are happening right now. Again, if it's that specific industry, that's, if we're forced to close down again and that particular company has to sell. So it's going to be really about projecting the sales.
Yeah, and I think, Nancy, to add on to that, right, we start by looking at how much cost and how much retail product we have out there and how much in revenue we need to generate in cash flow to be able to pay for those things. So we also want to look at, kind of sets our goal as far as what's going to be our sales dollars and then how do we hit them. Also, price point could be an important thing too. It's like, maybe something that you sold for $4 a unit might now need to be $5 a unit because you're going to have less potential in that space, and then you got to decide whether the market can handle that type of price increase. So the modeling needs to include that, and when the bottom line comes out and you're losing money, you need to figure out what we're going to change to do that, and are we realistic in meeting that. So I agree with Nancy on that. You got to project out the sales, but you might also have to make some decisions on price and how you go after that revenue dollars.
And I think that's a great segue, Dan, to one of our next webinars, because I think in one of our next webinars, we're going to actually go through a break-even calculation. So that really starts from the bottom up, and it really tells you what you need your sales to be in order to break even. So we'll actually go through an example of how a company can calculate what their level of sales need to be based on their gross profit and their overhead expenses.
Great, and that is a great place to wrap up too, because we are already a minute over. Dan and Nancy, thank you both so much. I know that was a lot of ground to cover, and hopefully people found it helpful. I did want to let everyone on the webinar know that SVA has created a resource page, which is svaaccountants.com/back, where the recording of this webinar will be located, as well as additional information and updates on getting back to business. You'll see we have an e-guide out there as well. Our next webinar, as mentioned earlier, will be 2 weeks from today at the same time, and the topic will be measuring profitability goals for a strong business position. I'd also like to remind everyone that the SVA team is only a phone call or an email or a Zoom call away. So if you're a client, please reach out to your SVA professional as questions arise. If you're not currently an SVA client and you have questions, again, feel free to reach out to me. We're happy to help in any way we can. Thank you again for joining us today. Have a great rest of your day, and we hope to see you at our next webinar in 2 weeks.